Hi everyone, it's Andrew Johns here from the Cash Management Group, and we've got a great market update for you today. Now there's a saying, very famous saying, I think it came from Warren Buffett, which is, it's not about timing of the market, it's time in the market. I'm going to prove to you through our data exactly why, so let's get into this. On February 12th, 2020, the Dow Jones peaked just over 19,500 points. On that day, it was already up 14% in 1 year. This is right before coronavirus started to hit North America. Sunday, March 15th, only 32 days later, the Federal Reserve makes an unprecedented 1 to 1.25% rate cut on their overnight rate on a Sunday of all days. Never had done that before. They announced a massive bond buying spree, $700 billion committed to U.S. Treasuries and mortgage-backed securities. They provided a backup loan program for commercial banks, and they coordinated with the banks of Switzerland, England, Europe, Japan, and of course, Bank of Canada, cheap global access to the U.S. dollar. March 16th, 2020, the next day, 33 days later since the peak of the Dow, we have a 2,997 point drop in the Dow Jones index in one single day. It's a 13% drop. S&P 500 was down 12% that day. This is the largest drop by the Dow Jones index going all the way back to 32 years on October 19th, 1987, known as Black Monday. At this point now, the Dow Jones is down 32% from its peak only 1 month earlier. March 23rd, a week later, 40 days since that peak, the Dow Jones is now closed at 18,600 points, down a whopping 37% from the peak. Fast forward to today, March the 16th, 2021, a year and 1 month later since that peak, the Dow Jones closes at 32,800 points, up 11% from that peak, and an astonishing 77% increase from the market low on the 23rd of March. And this is not including dividends. Look, folks, the point of this message is simple. It's not timing of the market, it's time in the market, like Warren Buffett said. If you had purchased the Dow Jones, the S&P 500, the TSX index in early February of 2020, at its all-time peak, and you weathered that terrible storm that we went through in March and April and the recovery period that we saw over the last 12 months, you'd be up at 11% from the peak. Now, secondly, if you are going to time the market, next rule of thumb is to remember that you should buy low and sell high. It's one of the fundamental rules of becoming wealthy. The 77% increase is something that would be very difficult for most people to time. Being able to time the very bottom and top of the market is luck. It's not by strategy or by technique. It's pure luck. But it's not about catching the very bottom of that market or the very top. It's about generally getting your bets right. Finally, there's also a famous quote, also I think by Warren Buffett, which is often, if you're not sure what to do with your investment portfolio, best thing to do is to do nothing at all. The point of that is, it's the time in the market that's most important, and having patience and finding the wherewithal during those negative periods to hold your positions if you own good companies in your portfolio. Look, we didn't see the big sell-off that we saw through 2008. It was a much sharper sell-off in March of last year, and it was not being driven by a global financial crisis that we saw of 2008. In fact, many of our clients took our advice during March and April of 2020 to load up on their portfolio. And as you can see from this demonstration, it's paid off in spades. If you'd like to talk to someone on our team about how we can help you with your investment portfolio, give us a call. We'd love to have that conversation. And remember, folks, it's not timing of the market, it's time in the market. Thanks for tuning in, and make sure to subscribe.